YouTube, what is up? It's good to be back. Now, I'm back today with a trade breakdown of what I define as one of my optimal setups. So I really want you guys watching today to be able to get into my head and see what I'm looking for, how I synchronize everything together to then end up formulating a fantastically optimal trade. So we're going to go through a proper trade breakdown today on the charts. And this was taken at the start of this trading week. It's currently Friday, the 22nd of November. This trade was taken on the 19th, I believe, at the start of this week on the Monday and the Tuesday. So get some pen and paper, buckle up. We're going to go through it, and I hope it gives you some fantastic insight. Just want to say before we get into the video, I now have a 7-day free trial available for my paid community. So if these type of setups I post a lot of the time, and I'm always very transparent with the trades that I take. So if you've been sitting on the fence or you want to join the community, click the link below. The link to the sort of the free trial will be there, and it'd be great to see you in there. Let's get stuck in to the video. So this trade ended up being a 4.5% gain. It was Euro JPY, and in the end it ended up being a fantastic trade. Only ended up being in the trade less than 24 hours, so it wasn't even a swing trade in the end. It was a bit more of a sort of an extended day trade, if you like. So just to give everybody some context, JPY basket, we had seen a breakout on the 4-hour. We'd also seen a really healthy close on the daily last week on the Friday, which broke structure to the upside. Obviously, we failed here to make a new lower low on the daily, followed by a huge Friday daily engulfing candle, body close really comfortably above. And so on my weekend analysis, just before the start of this trading week, we were technically going to start looking for some buys or some yen basket strength, some JPY strength. So at the state of play, obviously on Monday, on Sunday after market open, sort of UK time, we saw a natural healthy pullback on the 4-hour, which was brilliant, which naturally allowed EJ to have its, again, natural healthy pullback. And all we were simply looking for, because EJ was in sync, it had a broken structure to the downside on the 4-hour as well. And all we were simply looking for here was if price allowed us to pull back, which it did, because there was a fear here that it may have just continued going, but it did give us an opportunity. We simply fibbed that most recent 4-hour leg once it had finished, and we confirmed the start of that 4-hour pullback. And then we were looking for an area of interest between the 61.8 and the 78.6. So it gives us a better risk to reward overall. We can get tighter stops while still allowing them to breathe, and targets. It gives us a better chance of getting at least a 1 to 3 in terms of trade. So we had price structure, 4-hour structure that had been broken. We had the 4-hour 50 EMA. We had the 61.8 around 16400, nice round psych number. It was brilliant. There was lots going on. We also had the confirmation of the JPY basket that I've already discussed. And GJ, NJ, CJ, those pairs were all in sync as well, and all painting the same picture technically on the higher timeframes, 4-hour and daily, that we're going to be going lower, or at least one more leg to the downside, which we were looking to capitalize on. So when we came into this area of interest, I'll just take this off. When we came into this area of interest, we were looking for basically signs of wicking, rejections, slowing, a top or a base. Obviously a base would be when you're looking to take obviously a buy, but we're seeing price consolidate, slow, multiple wicking, smaller bodies, that sort of thing. Everybody always asks me, what candle do you enter off? And I don't. There isn't a specific candle pattern I enter off. It's more the properties I've just gone through that I look for. So as you can see here on the 1-hour, we had multiple stalling around this area of interest. We tapped into it once with a wick. But as you saw, we slowed and slowed. Look, we had a nice swinging 1-hour structure, and then we started slowing. And that was enough for me to end up getting in on an entry. Now, if you look at the 30-minute, obviously it just shows you how much more extended it was. But there was plenty of opportunities here after seeing this stalling, plus all the other confidences that we've talked about for us to then execute. So, because if you wait for just one particular type of candle, you are going to miss a lot of really healthy optimal setups, which will highly frustrate you, and then it will force you into overtrading and FOMO and all of that stuff that you don't want. So it ended up being a really, really clean trade. Now we ended up getting a scale in on this as well off this. So we had the 1-hour sell-off, confirming that brilliant, the area of interest had been respected, and then we simply fibbed that most recent 1-hour leg to the downside, And again, you can see we came off just about the 61.8. We had the 1 hour EMA in there as well, and we had a lovely, lovely sell-off. So in the end, overall, banking 4.5%. That was a 3% initial position, and then the scaling was a 0.5% risk. It was a 1 to 3, hence 1.5% targets, hence 4.5% overall. Targets were 160, 155, and we literally tapped into 160, 150. So the targets were beautifully placed. So a fantastic trade at the start of the week, which has set us up really, really nicely. And even if I just stayed, because I've taken more trades since this on other pairs, but even if we just capped it at that for the week, that was 4.5% gain. That is fantastic. Imagine if you made that every week. It's not realistic, but imagine if you did. It's 18% a month. That is unbelievable returns. Unbelievable. So really focus down on quality over quantity and be really hot on what an optimal trade looks like for your strategy and your edge, and anything else that isn't, avoid the other stuff and you double down on those winners.